Good morning. Welcome back to Kotak Securities weekly fundamental podcast. I am your host Rini Mehta. Ever wondered why the big names in the stock market sometimes struggle while the underdogs shine? This past week gave us a perfect example of that curious phenomenon. While the Nifty and Sensex both dipped around 1%, the mid cap and small cap indices were on a roll, outperforming their larger peers. So, what's driving this shift? Is it a sign of things to come or just a temporary blip? Let's break it down. So, here's a lowdown. Despite the positive vibes from global markets, our heavyweight indices Nifty and Sensex both slipped by about 1% last week. It's a bit surprising, especially when you consider that global markets were riding high on hopes of a rate cut in the US, thanks to some encouraging data. But while the big players struggled, the mid cap index gained 2.3% and small cap index soared 3.5%. This outperformance by the smaller stocks is a clear signal that investors are looking for opportunities beyond the usual suspects. Now, let's talk about where the money is going because that's always a good indicator of what's really happening. So, FIIs, that is foreign institutional investors, turned net cash sellers, pulling out 32,530 crores in August so far. That's a significant outflow. And it's not just an India specific trend. Emerging markets like South Korea, Taiwan, and Thailand also saw outflows, while Brazil and Indonesia were among the few that attracted fresh capital. The reason? Mixed global cues and the usual unpredictability of foreign portfolio investments. It's a reminder that FPI flows are inherently volatile and one should always be cautious while riding these waves. Moving on to some company specific news. First, on Scient, which is an IT company, made headlines with its decision to divest a 14.5% stake in Scient DLM, leaving it with a 66.7% stake. The $103 million they'll raise from this sale is earmarked for some strategic moves like investing in the semiconductor business and paying down debt. It's a bold move, and while the opportunity to expand into markets like medical, industrial, and telecom is attractive, there are risks. Success will largely depend on the programs they choose and how well they can leverage their intellectual property to speed up custom chip design. We are still bullish on Scient, maintaining our buy rating on the stock with fair value or target price of 2050. Lastly, our pick of the week is Indigo or Interglobe Aviation. If you have been following the aviation sector, you have probably noticed that Indigo is becoming the airline of choice for many travelers. Our analysis shows a strong preference for Indigo among domestic flyers, coupled with a tightening supply of available seats. This is setting the stage for better than expected load factors in the coming quarters and potentially higher yields as well. If crude oil prices stay within a manageable range, Indigo could see its profit margins, its spreads widen significantly. We are talking about potential upside risks to both our earnings estimates and stock's fair value, which we currently peg at 5,200. So, what does all this mean for your portfolio? The market is a mixed bag right now with opportunities in both the big and small corners of the market. It's a time to stay cautious, curious, keep an eye on those under the radar stocks, and always be ready to pivot as the market dynamics shift. Thanks for tuning in, and I'll see you in the next episode. Thank you, signing off.